Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to discuss a little bit how 50 is the new 75, plus a little bit of a worrying foreshadowing once again by Deutsche Bank for 2023, and a continuous fight against inflation. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand for entering any trade. With that out of the way, let's get started. Let's start off with Deutsche Bank. So basically, Deutsche Bank's done a recent survey, and it paints a pretty gloomy picture. In fact, this survey was the biggest risks to hit market stability in 2023. Now, can you guess what number one was? Number one was recession proves to be more severe than expected. That's 46%. So that's the biggest risk for the market. In second place, not surprised, inflation remains high. The survey, 34% of those surveyed said this was the second most dangerous risk to the market for next year. Number three, Fed continues to be its Fed continues its aggressive tightening cycle. That was 30%. 30%. Fourth was Russia and Ukraine conflicts escalates. Gets even worse than this. That's 24%. We're scared of that. And number five, which I think we're already seeing this already, is stagflation, 22%. People surveyed said that was the fifth biggest risk to the market next year. Don't forget, those of you who are new to trading, stagflation is when inflation is high and growth is slowing down. So we're already seeing some of that now, especially in the likes of the UK. And we'll talk a bit more about stagflation in a minute. But like I said, to be fair, going over these risks, that we already know. We've been talk of the town for so many months now. So many trading sessions, we've been talking about recession risk and the fear of the UK going into recession, which is almost there already, Europe to follow, and of course, then obviously the US to follow at some point in 2023. So that's not new. High inflation, we know that. We've been fighting inflation all year. This has been one of the biggest struggles of the lot. And obviously, the Russian and Ukraine conflict doesn't look like to be going anywhere or slowing down anytime soon. And plus, the Fed continues its aggressive tightening cycle. That, again, we know this already because the Fed have said they will continue to raise rates. They may not be as aggressive with the basis points, which we'll talk about again in a minute, but they have said they are going to raise interest rates higher than they originally thought they were going to. So we are looking in a region of 5% plus. So again, we all knew this. But yeah, stagflation, this is the big thing as well, which I'm saying, I've said we're seeing already in many ways. I mean, in this survey as well, 62% chance, 60% surveyed, they said there's 62% chance of stagflation in the US. That's up from 33% in October. 86% chance of stagflation in Europe, up from 42%. And the big one, which I can already see already, 92% chance of stagflation in UK, and that is up from 63% previously. So 92% chance of stagflation in the UK. That is frightening. That is frightening. On another story, again, keeping with inflation, excuse me. According to David Mann, who's the chief economist of MasterCard Economics Institute, he says inflation has peaked, but is not falling to pre-COVID levels in 2023. He actually said this: inflation has peaked this year, but it will still be above what we had been used to during the pre-pandemic levels. So it's still going to remain very high next year. It's not going to be at the levels it is at the moment. Don't forget, US CPI comes out tomorrow, and we're going to talk a bit more about that in a moment. It's expected to come in at 7.3. year on year, down from 7.7. But he said it's peaked, but it's going to stay really high. He also went on to say, we do expect that we'll go back down in the direction where we were back in 2019, where we were still debating how many countries needed negative interest rates. However, he went on to say, that's going to take many years to achieve that. He also said this: inflation has become the big challenge, and it's been spiking and staying very high. Now, I can see his point. I really do, because don't forget, we've had a very, very, very aggressive Fed. Okay, 75, 75, 75, 75. And obviously, their decision is on Wednesday. And inflation, though has peaked, is still not coming down quick enough. Year on year is still, came out last month at 7.7%. It's still expected to come in at 7.3. Don't forget, the Fed target and the Bank of England target and the ECB target for inflation is 2%. 2%, and we're way above that target. But like I said, the fight against inflation is continuing. And like I said this morning, we got such a massive week ahead of us. We've got four central banks to make their interest rate decision. And this is the thing: 50 is the new 75. That's right. The expectation is they're all going to do 50, because previously, the Fed, S&P, Bank of England, and ECB raised interest rates by 75 basic points. This time, the Fed, the S&P, the Swiss National Bank, Bank of England, and ECB are all expected to raise only by 50. So it's now the 50 basic point rate hike club. So anyway, that's the anticipation. All four are going to go 50 to 50, down from the 75 from their previous decision. But anyway, let's have a quick look at the markets. It's been pretty sideways today, as you would expect, as we got such a big week. A lot of the market is sort of waiting. As you can see, they've been quite range bound at the moment. The sterling, though, the British pound, is testing at the moment that key area of interest for me, 122.561, currently trading just below that slightly, at 122.55. As you can see, it's been testing this level on a 30-minute for a while, but it is trying to test it at the moment. The next area of interest then potentially after that could potentially be 122.44. It's still above the 200-day moving average. But you look at on a daily, let's have a look at that. There we go. 121.092 for me is going to be the next real big level if we can break through those two levels, because that's the level where the 200-day moving average is as well. Euro, pretty much the same picture as well. Pretty range bound throughout most of the day today, as you would anticipate. Currently testing that 200-day moving average on the 30-minute, though. Fair way to go on the daily, though, to test that key area, 1.03882. Currently trading slightly under pressure at the moment, slight dollar strength, 1.0521. Dollar yen, again, pretty much same picture. Trying to break through that key area for me, 137.41. Actually, that which is 38.2 Fenerbahce retracement level. So we are seeing a bit of dollar strength. Gold, of course, obviously. Again, yeah, pretty much on a down day today. So a little bit of dollar strength. Pretty sideways under the 200-day moving average on the 30-minute. But the main daily for me, it's still got a fair way to go before it tests that key level of $1,759, which indeed is the 200-day moving average. So that's where the market is currently at the moment. Like I say, it's been pretty sideways today, but there has been a good reason for that. And that is, of course, we've got such a massive week this week. Absolutely huge week. And like I said, I did it this morning. We've got UK claimant count tomorrow, UK unemployment, German CPI, but US CPI tomorrow. Then the Fed interest rate decision on Wednesday, followed by the S&P interest rate decision, Bank of England interest rate decision, ECB interest rate decision, UK CPI, US retail sales. My Lord, what a week this is going to be. This is potentially going to be a massive week. And like I say, the main event for me, obviously, will be the Fed decision, but it will be the US CPI, because that potentially can cause an awful lot of fireworks. And that is why, obviously, I'm doing a tixee live watch along at 1:20 p.m. UTC. And this is going to be on Tuesday. So please come along and watch me for that. So it's tomorrow. Should be really, really exciting, potentially. I always want to say potentially, because every time I build up a watch along, most of the time I'm right. There is fireworks, but every now and then I've done a watch along. it's been pretty flat. So I say potentially, but I'm pretty sure we might get fireworks tomorrow with the US CPI. US session as it currently stands, S&P slightly in the green, 0.31%. NASDAQ currently trading slightly in the red, negative 0.16%. And Dow 30 currently trading slightly in the green, 0.67%. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Simply say hello if you like. I mean, are you excited about the US CPI like I am tomorrow? I mean, I remember last time we did one last month, there was a lot of fireworks in there because it was a big surprise. So hopefully we might get some nice surprises tomorrow as well. So please come along and join me for that. Don't forget, if you think of a question later, you can put it in the comments section, either on Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which will be tomorrow morning, obviously at 9:30 a.m. UTC. So please come along and join me for that. Okie doke. If there is no questions, not a problem. Not a problem. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you put up with me, my over top enthusiasm for the market, I simply cannot help. And give me one of these. It's nice to know that you like what I do. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand for entering any trade. Till next time, every single one of you, trade safe.